Hello and welcome to today's packed video, which is called S&P 500. Was yesterday's session good enough? Good enough for the buyers? Or not really? That's what I will dive into in depth in today's video, bringing you more than a couple of charts. Starting with the weekly. Is market breadth improving? Advanced decline line, advanced decline volume? Is it meaningful enough? Does it show exhaustion of buyers or just a healthy rotation? Have your pick. This is the daily chart. But there we can see some improvement in the percentage of stocks trading above various periods of moving averages. So this would be something that is not entirely gloomy. Sectoral perspective. Note how tech had been underperforming yesterday following prior 5-day strong outperformance of S&P 500. Is it a cause for concern, or one day is part of what I call healthy rotation hypothesis? This remains to be seen. Let me point your attention to discretionaries outperforming staples, which would be a risk-on sign. This is of course kind of backed by real estate and utilities doing great, and energy, which is not always a risk-on classical sign. So there has to be an explanation for that, and of course, as I will show you, it's in the bond market. Talking winning picks, and winning picks on the long side. This is Bitcoin with overlaid what I had been saying would be magnifying its gains, and that is strategy. So we are seeing both of them having picked up steam to the upside, consolidating around 95. And is this chart bearish to you or bullish? To me, it's bullish, and clients have been cautioned about the upside breakout from the consolidation that was back then at the blue, which is 50 period moving average. Bonds. Is it a retreat from risk-taking when it comes to junk corporate bonds, quality corporate bonds, and treasuries? The chart is pretty clear, and the same goes for latest upper and lower knots on junk corporate bonds. So that is one sign. Bond market, I had been featuring this chart on the weekend, have marginally ticked up bond market volatility, which is the MOVE index. Is it a cause for concern, or does it mirror what is going to unfold couple of days down the road when it comes to volatility metrics as regards the stock market itself? This is what I will show you right next. What I had been saying, that we can look forward for a downside break of the looming triangle formation in wicks to forward-looking wicks. And this is exactly what we are getting, and it's even better seen in wicks itself, plain old-fashioned wicks. And that is still quite conducive for the stock market, as in not expecting a deep flush. Thus far, the trading had been very, very technical. So we had seen that the sellers had been unable to break below Friday's lows in either of the three main indices. And actually we had seen as well Russell 2000 do reasonably well. What is the defining factor for today? It's of course going to be the Trump and Bessent speech, And if you pay attention to how stocks had been reacting lately, especially when Bessent was speaking, there is reasonable enough expectation, and the rumor mill has it this way, that there would be talked either India or Japan. I don't think it's yet time to talk deals with the European Union, let alone some framework which would give good hopes of progress being made towards the final trade deals in this risk tariff strategy, let's call it like this, because bonds had not been taken favorably to that, and neither had been the US dollar, which will be another couple of charts. How it goes when it comes to real assets, trading signals clients know that I have been talking the looming divergence between gold and silver. It had unfolded. I did not trust gold upswing yesterday. Gold has declined since. Silver had been relatively holding its ground. And there is of course another disconnect in the rising copper price versus very tame hammered down oil price. So this is not any kind of a bad surprise to trading signals clients. Talking yields, we are seeing big return to treasuries, which had been always my notion and statement that this is the true market to defend. And that's what we are seeing in bid returning to short-term and also long-term treasuries, but the short-term ones, which is the overlaid black line, are benefiting most mightily. And that sends a message, which is of course being as well reflected in the sectoral perspective of S&P 500 moves that I had shown you. So the question remains, is this a good enough improvement for the buyers or not really, and we are seeing some kind of a tiredness, and I'm giving very clear-cut answers to clients. US dollar, this has been a fly in the ointment with failure to return above 100 and actually quite clear rejection yesterday in spite of the bid returning to treasuries, which is not exactly what one would want to see. My joint page will help you select what's right for you based on what and how you trade. Forget not about combining the quality daily analytics with charts on my site with intraday channels on Telegram for premium clients. You know pretty well my journey and my great respect paid to 3 dots. Disclaimer, and talk soon again.